What is going on, everybody? Welcome back to day 4 of the bootcamp. Today, I'm going to be talking about supply and demand and liquidity, why it's important for us, and why do we look for it. Let's go. Okay, so let's get started with supply. What is supply? A supply zone is basically an area of interest where a lot of people wanted to sell. A demand zone is the complete opposite. The demand zone is where a lot of people were interested in buying. This is where the big buys started to happen. How are we going to identify supply or demand zones? It's going to be very, very simple. What you see here is a green candle and a green candle, and after that, a strong bearish candle. For demand zones, we see a red candle, and a green candle. Well, obviously, it's never going to be two green candles and one red candle, or two red candles and one green candle. You can have one green candle, then 3 red candles, or 15 green candles, and then maybe 2 red candles. Okay? This is going to be the fractal structure that we went over in the previous video, where if you have a fractal break in towards the highs, let's say you have this overall move creates the demand and supply zones, right? Because we had this break of structure in towards the downside, we created this change of character, and in here is going to be our demand zone, where price will seek into, take liquidity, and move out of. How is it going to look like for supply? For supply, it's going to be the top zones. For demand, it's going to be the bottom zones. When we look here, you see a red move in towards the downside. Then you see a green move in towards the upside. Then another red move in towards the downside that broke market structure. That's very, very important. We need a move that breaks market structure. We don't just want to see this, right? Because we did not break market structure. We need to see the break. After that, you are going to identify on a higher time frame probably the fractal structure. On the daily time frame, it's going to look like this, where the overall up close candle is going to be your supply zone. So let's say you have a candle here with this wick, you have this candle here with this wick, and then you have a candle like this here. This candle, because it's the one in between the fractal structure, this is going to be your supply or demand zone. In this case, obviously demand. So if we look at this in this picture, we have a move down, we have a move up, we have a move down that broke market structure. So let's say we have a green candle in here. Right, this move is a green candle. Now let's say this is the overall move that we have. We have moved down, we see this move up, which is a green candle, which is a move down again, which breaks market structure on the fractal time frame or on the fractal structure. We break market structure in towards the downside. We retest the up close candle that broke market structure. Then we are going to move lower from this zone. Right? This candle is going to be our area of interest. For the demand, it's going to be the opposite, right? You need to see a sell before a big buy up that broke market structure. So what is that going to look like? For a demand zone, it's going to be looking like this. If we break in towards the upside, we create this overall area of demand. So the sell before the bigger buy up, as you can see here. Then we create another sell down, we create another buy up, and then for the next leg, it's going to be this. Now let's look at it on the charts. Now, if we're going to look at this, on USD CHF, we have clear market structure in towards the downside. We create a low, we create a high, we create a new low. So we broke market structure. That's correct. What are we going to look for within this range? So we have this high, we have the market structure break. We're going to look for a buy that broke market structure. What do we see here? We see a buy that broke market structure. Well, obviously you can see momentum getting in here. So what we're going to do is we are going to mark out the green candle, green candle, green candle, green candle, green candle, and we're going to grab it, right? The overall buy before the bigger sell-off. Not just this candle, because that's just way too tiny. For swing trading, we need a lot of breathing room. So what we're going to do is we're going to mark it over, and we're going to call it supply. Here you can clearly see price reacting towards the supply zone. We can see a tap here, a tap here, and a tap here. Obviously here as well, here as well. So what does that mean for us? This is an area where we are going to be looking for sells, not for buys. Why not? Because we broke market structure in towards the downside and we have supply in control on the daily time frame. If we're going to look on the fractal structure, it's going to be very beautiful as well. We have a fractal breakdown. We have a fractal break in towards the upside, which creates the overall sell move before the bigger buy that broke this market structure. So what we're going to do is we have this huge move down. We have a move up. We see a bigger move down. So we're just going to drag from here to here. Let's move this one. And what are we going to see? For this short period of time, we have demand in control. And obviously, you can refine your zones if you want to. I think even this little sell before the bigger buy that broke market structure is good enough. All right, you can see the fractal structure is just supplier demand in control. You see a low getting tapped, a low getting tapped. You see another fractal break in towards the upside. Right, what do we see? This gets disrespected. So now from demand in control, we're going to supply being in control. So what does that mean? That means that this is the low that we need to break in order for us to shift fractally even lower. You can see that these green candles are getting respected. This one here gets liquidated. This one here gets respected. This move here gets respected. And then this move here gets respected. You can clearly see how supplier demand should be in control, right? Price uses it as support or resistance to move in the desired direction. Let's look at it through demand. Okay, so in this case, on USD JPY, we have a clear area of demand that are being respected and supply that is being disrespected. So from this point onward, we can see overall we are in an upside move, right? This is clearly going to the upside. So what we're going to do is we're going to see where is the last fractal high break. So we have a high here. We create a high, we create a low, we create a new high. So we are in this range. What do we see? We have the down close candles before the big move up that broke market structure. In this case, it is fractal market structure. This is our demand zone. Same thing here. We break market structure. We create a new low. We create a new high. So this is the market structure break on the fractal model. What do we do? From the high to the low, we drag it and we take this as our demand zone. What do we see now? We create a high, we create a low, we create a higher high. Okay, so in this case, this would be a losing trade. But what can we do is we can look at the daily. On the daily, we can see that we have these two bearish candles that push the price higher. But you also see that this is not a fractal break on the daily time frame, but it is on the 4-hour time frame. So if we're going to look on the daily, we have this daily demand zone that is going to push price higher, which is this. Then going to be used as liquidity, which I will go over in a second. And you can see that it is pushing price higher. After that, what do we see? We see another market structure break in towards the downside. We take the overall sell move before the big buy up. And you can see it gets respected and we push price higher. Now in this case, what do we see? We see a break. We see a break in towards the upside. We create a lot of smaller, higher highs. And what do we see? We create a new demand zone, which in this case gets respected. And then on the lower time frame, what we're going to see is we can see that these market structure breaks indicate that that demand is currently in control. Structure break, structure break, structure break. Once we get a structure break in towards the downside, we can look for sells. Now, this is a clear period where demand is in control, right? There's obviously going to be periods where supply and demand are gonna fight against each other, and that is consolidation. You don't want to trade that. Now, we went over supply and demand. Now let's go over liquidity. What is liquidity and how can you spot liquidity? There are three forms of liquidity. One, we have range liquidity, where price moves sideways, takes a side, for example, the low, and we move higher. Then we have trend line liquidity, meaning we create higher highs on a trend line. You can clearly see here we have 1 tap, 2 tap, 3 tap. This is a great form of liquidity. Price will almost never just take out this low. We will continue down to take this low and to then look for further upside. And then we have just normal highs and lows where price will sweep a high or sweep a low to then look for further upside or downside. Now let's go over and look at it on the charts. Now you can see clearly we are breaking highs in towards the downside. So let's say we take this break of structure and we want to look for a trade within the demand zone. We want to look for overall liquidity. If we want to spot liquidity, we go a time frame lower and we can see that in the leg that pushed us in towards the upside, we have these little bumps, these little tiny lows in a market. We can see, okay, this is just a low. What did we discuss? A form of liquidity is just a low. We want to see it get swept out and we want to see a reaction off of that low. Now, what do we see in this case? We can see that we create this low, we tap the demand zone, we get a fractal break in toward the upside. Here we get a fractal break in towards the upside. We create another fractal break in towards the upside and we push higher. How did we catch this? We catched it from this low. Now let's go over to another example. Now just a tiny bit further, we can see that we broke structure in towards the upside, creating this as our overall demand zone. If we go a time frame lower, or we do not even need to go a time frame lower, we can see that we have relative equal lows here, which is sideways price action, right? And what do we know? Sideways price action, we will sweep one side and we will return to the other side. How do we see this? We can see the market is not doing very much until we move in towards the upside. And this is a fake demand zone. Why? Because people will get into long positions here because they think, okay, this is an area where people were interested in buying. But they forget that they're in an overall demand zone where this is just going to be used as liquidity to then create a fractal break in towards the upside. We can see a break lower. We can see a break higher. And now these down close candles are our demand zone. So we're going to mark this as our demand zone. And we are going to see we have this little bump. We have a red candle. We take this as our liquidity. And if we're going to move a time frame lower, which is the 15, we can clearly see we just have the exact same thing playing out. We can see we have a fractal break in towards the downside. We have a fractal break in towards the upside. And we just continue higher. Here we do the same thing. We break structure, we make liquidity, we sweep the liquidity, we move higher. Same thing here. We sweep liquidity, we move higher. We sweep these lows, we move higher. It's just a repeatable pattern. So the steps that we are going to take is we are going to mark out our market structure. So when we come to the charts, we want to do this. We have a break of structure. We have a break of structure. We have a break of structure. What do? We mark out the demand zone, so the overall move that caused the break of structure as our demand zone. We drop a time frame lower. We're going to see, okay, we have liquidity resting above or inside of the range. And we want to see, okay, how does market react? Do we get a nice reaction? Or in this case, do we just push lower and we do not get a fractal break? In that case, we know that supply is currently in control in this leg, right? We have a buy before a sell, which is a supply zone. Here, same thing, buy before the sell, buy before the sell, buy before the sell. And when we no longer support the supply zones, you can clearly see we are going to start to respect the demand zones. So the sell before a buy, the sell before a buy, and then the sell before an overall buy. And you can clearly see how this supports price higher. The best tip I'm going to give you is get the low to the high and look for liquidity resting below or on top the 0.5 fib. You can clearly see this low is resting above the 0.5 fib. This low is inside of this range, inside of the overall discount zone. And this is where we want to look for sells or for buys. Here you can see liquidity. We don't see a reaction. We don't see a fractal break. Until we move towards this low, we do see a V-shaped reversal. And we go from supply to demand that is being in control. If you guys want to support me, make an account through my affiliate link with a broker or get a proper account with my affiliate link. And if you guys enjoyed, make sure to drop a like and subscribe. And I'll see you guys in the next day. See you guys.